We're here in Monte Carlo for the Rendez-Vous de Septembre for AM Best TV. I'm Richard Banks. And I'm joined now by Neil Eckert, who's Chief Executive of Conduit Re. Neil, it's great to see you again. Welcome.
Nice to be here.
So Neil, Conduit's going through something of a transition period at the moment. Tell us about that. Tell us about the challenges and the opportunities that the current market presents a company like Conduit.
Right, so the first 4 years was about building the portfolio, deploying the capital. We now have a portfolio of somewhere around 1.1, 1.15 billion premium. And it's now time to sort of modify the portfolio. We have a long-term target of writing sort of close to 50% excess of loss. Maybe not quite 50-50, and that'll be a process of evolution, not revolution. But, you know, as the company matures, market conditions are changing. So the first 4 years of our life, markets were hardening. And it's not about absolute pricing necessarily. It's sometimes about whether something is softening or hardening. I mean, prices today are probably at around 23 levels. But in a softening market, you've got to work harder to be on the right business. And, you know, we know that. And so that's the transition.
So you've been through market cycles before. Looking at where we are now, where do you expect the markets to go and how quickly?
I mean, the big issue from a really sort of Mount Olympus view is that the balance sheet of the industry has increased from about 550 billion in 22 to about 800 and something billion today. That capital can either be returned to investors or deployed. And people are all growing. That's going to cause at the highest level rating pressure. Underlying to that, in the P, C and S classes, there's about sort of 40 subclasses which have different rating dynamics. So we will see the impact of Ukraine in the marketplace. It's a serious loss for that market. And there'll be other pockets. We've seen a very big claim with the Baltimore Bridge. So, and we may even see a benign hurricane season. It's too early to call. I am touching wood. But to date, you know, we're in early September now. So there's lots of pushes and pulls, and we must respond accordingly. People are saying maybe it's more of a buyer's market than a seller's, and I think we have to tailor our cloth to fit that.
So Conduit's always put ESG at the forefront of its business. The current political environment seems to have shifted a bit and shifted focus for companies. What's Conduit's view as to the importance?
I think our view is that the importance hasn't changed. I've been involved with environmental markets for a long time before Conduit, and quite often you take one step back to go 2 steps forward, and I think a lot of it's politically motivated. If you have people on the right side of the political spectrum, they will have a different view on ESG, environmental, climate change, and we are seeing that. But I wouldn't be for unravelling our strategy because of government's change. It's about the long-term direction, and if people don't understand the importance of not just the E, but the S bit and the G, then, you know, I think they'll find themselves rapidly, if you U-turn every time there's a change of political environment, then you'll end up wasting a lot of time and energy, and I think we're committed to our course of action.
So we're here in Monte Carlo. Inevitably, conversations tend to sort of coalesce around certain themes, one of which is this year, I suspect, is going to be AI. Tell us a little bit about how you see the opportunities and perhaps also the challenges that AI presents.
So if you look at some of the most valuable companies in the world, they've been built around modern tech. And there are 1 or 2 tech businesses that are worth more than the global capitalization of the insurance specialty sector. So it cannot be ignored. I think there's two things that really will create both opportunity and challenge. One is how you manage data and what can the power of computing teach us that is currently done in a fairly ad hoc fashion. The other one is how much we can eradicate the desperately inefficient processes stuff like policy wording, stuff like processing of accounts and claims and all of these sorts of things. And the more that you can automate, because we don't have a physically deliverable product, and yet the frictional cost in delivering those policies to the end customer is pretty high. So there's opportunities and there's threats depending on where you sit in the industry. But there is no doubt, I mean, to my mind, it'll be the sort of the next industrial revolution.
A final question, if I may. What issues are being missed now that will be most important tomorrow?
There's one recurring theme for me, which is the coverage gap. I mean, we have to respond as a market to new types of claim patterns, and we have to provide coverage. And I think we're missing out, and the inclination of underwriters is to write new exclusions when things happen or to change models. We've got to find a way of broadening our addressable market. You know, that for me, and funnily enough, it's been spoken about for a long time. It just, to my mind, hasn't yet been addressed.
Brilliant answer, Neil. Thank you very much indeed for joining us.
Thank you.
For AM Best TV, I'm Richard Banks.